Hi everybody, my name's Trevor and I'm with MarketDelta. Thanks for joining us today for our special webinar on the volume imbalance footprint. I have a PowerPoint we're going to walk through. I want to showcase the functionality, I want to explain what it is, and I want to walk through some screenshots and some examples of what this is. Now, before I go any further, this footprint, it's a new footprint. It came out this summer. It's something we've been using for quite a while. And really it's geared for those who have maybe ever had trouble connecting with the footprint or understanding how to apply it. So there's been a lot of effort poured into really making something simple and easy to read. And that's what you're going to see over the next hour. There will be time for Q&A. So if you have questions, it's probably best to hold them to the end, and we'll try and spend some time. I expect this to be about an hour long, and very, very fruitful event. So for those who are new to MarketDelta, these are just 3 facts, and we're going to move right into the material. We're the creator and inventor of the footprint chart, and this year is actually our 10-year anniversary. So we're very happy that we're able to continue on and continue innovating and providing great tools for traders. We're a leading market profile reseller for the CME group, so we have a large following of market profile users, and we're not going to be touching on market profile so much today, but if that's something you like, you may want to consider checking out the software. And then last but not least, we're a full-featured trading and charting software company. So let's jump right in. What is the volume imbalance footprint? So basically, it builds upon our years of understanding and experience. That's what I pretty much said up front. We've taken everything that we know to be true and everything we know people to struggle with on the footprint and tried to distill things down to a simple, easy to read footprint type that would be applicable to those who are real experienced and those who aren't. And it takes all that knowledge and experience and puts it in a nice, easy to read display. Now, we know many of our users are seasoned professionals, and this easily applies to them as well. So if you're not a beginner, you'll still see some great benefits in this, so hang with us. It's an easy way to make use of that inside the bar data. So that's what the footprint is. It helps us see inside the chart, as you know. But this has some built-in logic really to help you react versus rather than read the data. It uses an algo to identify volume imbalances, which is really more of a different methodology, or an alternate methodology, I should say, than what the footprints have been built on in the past. So we'll go over that before we get into the examples so you understand what you're looking at. And again, it's built specifically for anyone who's ever struggled to read the footprint. So if that's you, this is something to look at for sure. And then last but not least, it shows market tendencies, and you'll see that as we look at these examples. It really helps understand who's in charge, who's in control of the market, and shows us, it clearly identifies the fuel or the volume in the market, and makes the reading much easier. So basically, this is the alternate methodology, and I'm going to just there's a few slides that kind of cover this. Don't feel like you have to understand every little bit, because we'll explain this over the next hour. But traditionally, so this is just a simple bid-ask footprint, right? That's what it looks like to most of you who've ever seen it. And traditionally, we've always looked at this is the bid-traded volume, and this is the ask-traded volume at this particular price. And that is what it is, right? Now, this is the volume imbalance footprint, and the difference is it compares this bid in the market to this offer in the market. And so these are the volumes that traded at the offer and at the bid. So it compares like this, not like this. Hopefully you can see my cursor moving. Let's take a look at the next slide. This maybe shows it. Is what it's doing, it compares the bid price to the ask price above. This is always the relationship using this methodology. So you've got this price being compared against this one being compared against this one against this one, so on and so forth. Okay? Now, what's happening is in that comparison, and all we're doing is comparing the volume that's trading on the bid versus the volume that's trading at the ask, what it is showing or what it's looking for is some sort of imbalance. Which side of the market is experiencing more volume, that bid side or that ask side? And so what we've done is coded up an algorithm that essentially shades or colors the one that's experiencing not just more volume, but significantly more. And out of the box, well, I'll show you a graph here in a second. But that's the difference. And we allow you to actually play with the algorithm. So we have one that's defaulted, but we allow you to change that. So maybe you want a higher threshold. Maybe you only want to color the imbalance green. And when I say imbalance, I'm talking the volume that traded here versus here. Maybe you only want to color that when it's maybe 200 or 300% different, meaning 300% more volume trading at the offer. You'd want to see it green. We allow you to do that, and it's real simple to do, and I'll show you how to do that. So let's just walk through, let's just take a look at this one. And actually, let's go to the next slide because I think I got this one. Yeah, this one's essentially the same one. So here's the definitions. Let's look at this comparison right here. So the green, anything that's shaded green within the bar or the footprint represents strong ask volume. What is the strong ask volume? Strong ask volume is simply strong buying, more aggressive buying. It's that buy volume imbalance. Think of it as a buy volume imbalance. And red, it's comparing this price against this one. It's a sell volume imbalance. We refer to it as strong bid volume. So you're always comparing in this direction, right? Bid versus ask, bid versus ask, bid versus ask. And so we want to see these imbalances. This will probably make more sense once we look at some charts and you have more bars to look at. So bear with me if this isn't making sense yet. But what the algorithm or what the volume imbalance is simply doing is trying to just you don't have to read all the numbers. Simply refer to the ones that stick out or that are highlighted green, or you'll see blue sometimes. Blue would simply be just a preference. I like mine green and red. But green represents more aggressive buying in that imbalance, and red represents more aggressive selling in the imbalance. And you'll notice, if you haven't already, the opposite side of any imbalance, we just call it weak or neutral volume. And frankly, it really doesn't matter. I don't pay much attention to it. As well as these grays, it's just insignificant. There's really no imbalance taking place within here. So again, the focus is on the colored numbers. Here we've got selling, here we've got buying. All right? So let's move to the next slide. So here's just definitions of the terms that I was just using. The strong ask volume is typically green or blue, which represents aggressive buying. The strong bid volume is typically red, meaning aggressive selling. And the weak volume, either side, is typically navy or silver. That's neutral volume. So if I go back, you can see this was the navy, this is that weak or neutral, and this was the strong bid volume. And remember, the comparison is this price against this price, this one against this one, right? This one against this one. It's always that up and to the right, up and to the right comparison, if you want to think of it that way. Okay, so there's some questions on why do you organize it this way. We still want to keep with this trading, this volume occurred at this price, not down here at this price. So we're still trying to be true to show you where the volume's trading. We just have the algorithm in place to show you when that imbalance occurs. That's the reason, and that's the right way to do it, we believe. Okay, so this will be the last thing before we get into some real examples, but I think it is. We're getting close. So for those of you who have market delta, the good thing is this is already in the software if you're running the latest version. And it's simply just another footprint type. You just double click your footprint. It's called volume imbalance. And here's how you set it. Just look at this screenshot. This would be kind of like your settings. Automatic is what it's going to be out of the box. Automatic is a default setting of 140%, meaning that comparison that we just talked about, that imbalance is simply, it's 140% threshold. If there's 140% more that trades on one side, then it shows you, it's going to highlight that green or red. Now, most of the screenshots and examples you're going to see today, I'm using the default setting. You'll also see, though, a few that use the manual setting where I've upped the imbalance threshold. And there's some pros and cons to doing that. I would really recommend most people just run it by the default automatic initially, and then play around with some of the levels. I've gone all the way up to 400 or 500% imbalances, which is interesting, just looking for some of those extreme imbalances. But if you want to set the manual, you simply click manual and you type in the percentage. So if you type in 200, that's 200%. All right. All right, so now let's get into some of the so I'm going to basically talk about three types of patterns. Not just patterns, these are the way markets move. We're going to look at some reversals. We're going to look at some congestions and sideways markets or rotations, and we're going to look at some trends. That's pretty much what we're going to look at. And then we'll jump in, maybe by time allowing, we'll jump right into a chart from today. Most of the examples that I have are of today or the last few days. I didn't want to really cherry pick anything. I just wanted to pull out recent market data. So, but we'll jump into today's chart and look to. There's some great examples. I was actually trading some of this. I'll show you a trade example that I took based on this information. All right, so let's a few notes just to open up. What are we looking for with the reversals? Watch for volume imbalance color shifts at support and resistance. So let's just talk about that. This is the volume imbalance is going to be best used, I feel, is a tool to qualify the trades that you see. So we all have ways that we're looking to take trades at certain levels or whatever it might be that says, I want to trade at that level. I can't answer that. You can. But we all have them. It might be support and resistance. It might be pivots. It might be who knows what. But it's something that says we want to take a trade at that level. Well, then the next question is, how do you qualify it? Why? You just arbitrarily just take it every single time? Or is there a method or manner that you use to qualify the trade? This is the tool. This is the tool. And you'll see why here, because it's allowing you to look inside the bar using the footprint, and then it uses this imbalance algorithm to identify these patterns. So watch for volume imbalance color shifts at support and resistance. Might be value area support and resistance. It might be low of day, high of day. Those are great levels to look at. And look to see, are you seeing buyers enter in against support? It's a simple question. Are you? And you guarantee you can't tell that now. You need to be able to look inside the bar and see this happening in real time to make any judgment. Same thing goes for resistance. Are you seeing sellers step in at resistance? So let's, I think there's one more point on this. Okay, so it makes it easy to identify the shifts in order flow. And the reason is you're able to see inside the bar and you're seeing this happen in real time. it really adds confidence to your trading to be able to feel like you're in control and you can see what's going on. It's not a matter of looking at open, high, low, close. Oh yeah, the bar closed higher. Maybe I should take it. Well, that's useful information, but it certainly isn't as complete as what your competitors are maybe looking at. So let's take a look. Here's an example. I'm not sure when this one was. This might have been the other day. But here's what we're looking at. We're going to talk through multiple examples. So let's just jump right in. So you can see the market was going up, right? And then it went down. So we're talking about reversals here. We'll look at trends in a little bit. But market traveled up, and what do we see? Let's look at this bar right here. I called it bar number 4. You can see sellers entered here and sellers entered here. Now, I don't know if I had automatic settings here or not, but let's just I'm not sure. So let's just kind of roll with it. The point is, the market had rallied up 3 points, and I saw it go from buyers to sellers. Now that doesn't mean necessarily it's going to reverse, but it's certainly, if I was long and then I see this happen, I may take part of my position off because I'm seeing that imbalance enter. And then it's confirmed on the next bar, and then really confirmed on this bar. Of course, it's a little late if I'm already long, but you get the idea. It's simply looking at the order flow imbalances taking place within the bar. This is all showing this to you in real time. And then we go over here and we can see buyers entered, right? And look at this, 1, 2, 3, 4. So we'll talk a little bit about this later on, but there's definitely power in seeing it happen at multiple prices within the bar. It's not just a single price. It's actually a combination of prices, underscoring the fact that you are, in this case, we're up against the support level. Buyers enter back in to drive price higher, and up here we're up against a resistance level where the sellers enter to drive price lower. And it just makes it very intuitive to watch the market rotate or trend or do whatever it's going to do. So let's take another example. Okay, so here was one. When was this? I don't think this was today either. No, actually, this was a couple. No, this definitely wasn't. This is an old example. But this was set to 300%. So if you can see the screenshot, you can see manual 300%. So this is an example. I'm not looking for as many colors. I won't see as many, greens or reds, but I'm looking for those significant imbalances. And what I wanted to show here, because again we're talking about reversals, that's the theme for at least this little piece in the discussion, is this right here. We saw the market working higher. We see a real strong buyer. Remember, these are 300% imbalances, so that's strong. And then the next bar, right? This next bar trades, and look at it. I mean, what's obvious in this bar? There's no imbalance. There's a lot of volume, and you can look down here at the volume. See the volume? Heavy volume, but no imbalance, at least none that reached 300%. So that could be a pause in the market, and the market could go then higher. Yes, it could. But it also suggests that the market's digesting volume here. Buyers and sellers are just matching up. It's at a level that's it's essentially conducting or facilitating trade without very much directional component. Then we get the next bar that starts. By the way, this was a 5-range bar, 5-tick range bar in the ES. And we see some sellers enter. I don't want to make too much of that. But notice this was the one where they trade a tick higher, heavy volume in this bar, and this is what really got it going. 1, 2, 3. We call this the power of 3. And I know it really depends on what time frame bar you're looking at. But that has been a significant pattern we've seen develop within these bars and with this footprint type. Okay, so this is the volume imbalance and this power of 3, if you want to call it, and you may get more. Now when they're intra-bar, the same bar, 1, 2, 3, that's fairly significant pattern. You don't see much, and oftentimes results in an initiation of a move in the direction of that imbalance. So there's a ton of questions coming in, guys. I'm not even looking at the questions. I just see them streaming through. So I'll try and get to all that later. Anthony's also backing me up, trying to answer some as well. This is being recorded, so what I'm saying, you'll be able to watch it tomorrow. You'll get a link to the recording. All right, next slide. All right, this is what's this? This is crude oil. So for those of you, I'm not just going to be showing stock indexes. You'll see some crude oil examples. Crude obviously is a volatile instrument. It's fun to trade, but it's not for everybody. But here was one. Now this chart looks a little different, so let me just describe what you see. First thing you probably see are all these yellow boxes. I had added at this chart. This is actually kind of the default view that I like, but it kind of muddies the picture in terms of just describing the volume imbalance. This yellow box simply represents the high volume price of each bar. That's just something you can add on to the chart using the volume price statistics indicator. I just want to let you know that's what it is, and so I use that to track movement or that high volume price within the bar. But here's what we're looking for. Remember, we're still talking about reversals. So here we had, obviously, the market reversed up here. And here's one of my favorites. This is one of my favorites where we come off a buy volume imbalance. Notice each bar on the rally had a nice buy volume imbalance or multiple ones. I like that. The next bar, notice this was the high of the day actually. Almost. It was testing the high of the day. That's what we were doing here. This rally up, testing the high of the day. They get stuck long. The imbalance long, and then there's sellers that enter. They're stuck, and they're stuck at the high of the day. Now it's not huge volume, but they're stuck with sellers, and then we see that volume point of control migrating lower. Notice there was no real aggressiveness on our volume imbalance. I don't know what my setting was on this chart. I wish I would have had it up, but here's where it really, it kicked off some more, and then this reversal. But here's what we're looking at, guys. Do you see any greens on the way down? No. Did you see any reds on the way up? No. You saw them at the top, which was the reversal. And you saw down here, now I know there's a red here and a green here. You could call that an, you could say they offset. Man, I'm not going to argue with you. I then look down here. I usually have a volume breakdown at the bottom of my chart. I watch that. See what that tells me. This is always interesting because this is the volume breakdown, the delta bar. It actually had traded way down and then rallied up. So it tells me that the delta, really reversed within the bar. And then we had buyers step in. Right? So I don't want to overanalyze this thing, but this was a crude oil example. I think I have a couple more. And these are just some things to check out and look at. All right, the next one. This next one is really not a reversal. We're going to look at a different set of examples. This is a congestion, sideways, rotation, whatever term you use to, describe this type of market. So here's the thing to watch for in these types. And you can add to this list. I'm just trying to give some bullet points to go off of as you begin to look at these things. You want to watch the extreme prices of the range. Watch the extreme prices of the range. And the intrabar information provided by the footprint lets you do this. Of course, if you don't have a footprint chart, you can't watch the extreme prices. You don't know where the big volume is or the light volume or what the imbalance is. You're not going to know. With the footprint, you can watch that. and that's telling information, especially when the market's rotating. You're looking, you can look for guys, other guys, unfortunately. I mean, the market's a vicious place. There's people that buy the high and sell the low all day long, and they're trapped. Unfortunately, it's trapped. It's the way it is. So you're looking for stuck long, stuck shorts at price extremes. We'll look at a few examples of that. And then a clue, the volume imbalances tend to be at extremes. Not always, but you'll see them at extremes in these congestions. It's classic. Everybody getting long at the highs, everybody getting short at the lows. Alrighty. Okay, so here's our first example of the sideways market. So I just drew some yellow lines just to show us on the chart this this congestion or sideways. This was the NASDAQ. This was just a couple days ago or yesterday. I forget. It was just recent though. Just a pattern that popped up. This thing was chopping around. Notice this is what I'm talking about, the stuck longs. You know, getting this imbalance happening at these highs. You don't see any at the lows, but you do see, obviously it's holding. You could see that how it held. Drive it right into the low. Just wasn't really doing much. It was random. Here's what I'm looking for though, and this is it, because we know the market's not going to stay sideways forever. We want to see which way is it building to really blow out one way or the other. Which way is it going to break out, upside, downside? We never know until obviously it happens, but we can look for clues. And here's one of the things I've noticed with this type of footprint, with the volume imbalance. You get these clustering, or you get multiple volume imbalances within the bar, and ideally leading right up to. Now this is it right here. Now I'm going to post all these examples to our blog. All these charts will probably go up tomorrow. Okay, you'll get a link to that as well, so you can review the notes. I've tried to annotate the charts, giving everybody. This is great reference and resource material. Again, this is being recorded. I see there's people asking. We are recording this. So, all right. So here's a kind of a zoomed in. This is that sideways market. Here's another pattern I've seen. Again, sideways markets are the importance in identifying them is so that you're not buying the tops and selling the lows. We want to identify that randomness of that sideways market to be able to try and sell the tops or buy the lows or not participate. This is another pattern. I've just yellow boxed them, where you get these imbalances. Remember, the imbalance is compared like this, right? So these are basically buyers and sellers matching up at that price extreme. And there's people who are really trying to get long, and guys aggressively defending it, and it is what it is. But I've seen this be prevalent in some of the sideways action that I've looked at. Another thing is this. You know, this is I don't know what price this was down here. Just call it whatever price, but you can see it was holding, right? That's support. What did we see at support? Now don't answer it, because I don't want, there's hundreds of people in here and it'll just, I'm not asking you to answer this. Just look at it and think. What did we see at support? We saw buyers, we saw that buy imbalance, buy imbalance, buy imbalance at support. That's what you want to see at support. So if you're working off a value area low, or I don't know, pivot, whatever the level might be, I don't care. It doesn't matter. If it's a level that's important to you, it's important to you, and you want to have some ways to qualify the opportunities. So now I know these were small scalps if you were to get long, but at least it is confirming that level to hold and be defended by buyers. Okay. see. Okay, so now let's look at some trends. Here's the bullets on the trends. We want to follow the volume imbalance. I mean, I can't really say it any simpler. You'll see in these examples, and we'll look at today. We'll go back and find some examples today. I'll show you one that I traded. Just let the volume imbalance talk to you. Let it tell you what is going on in the market. Identify the trend using this and ride it. Look for and then look for that reversal of trend and lighten up your position. I'll show you the example that I was trading earlier, but it makes sense. Let the volume imbalance show you who's in control. Remember, the volume is the fuel for the market. It is the fuel of the market. And being able to automatically identify it on the chart like this, it's just watching it go. You just can watch this go and use it as your barometer to ride, or either stay in the trade or don't get on the wrong side of the trade. Sometimes it's more valuable that you just don't step in front of it. I think I say that in the next point. Let the volume balance keep you in the right side of the market. It's dangerous to fade, and we've all experienced trying to catch a falling knife, and it is what it is. It's a lesson we all have to learn. So here's an example. This was kind of a continuation example where the market had come up, congested, went sideways, and then took off higher. This is the ES. This was, I believe, yesterday. Might have been yesterday. So what we're looking for, guys, is this. The market really, this was kind of a big surge of buyers, but notice 1, 2, 3, 4, 5. 5 imbalances within a bar. Now, if that's late in a move, I would definitely consider that might be blow-off volume, that everybody's coming in to buy. I would look at it initially that way. Because if everybody's coming in last, especially after a big move up, and you get that kind of move, it's kind of that blow-off excess. However, what keeps this all valid is it did not trade through the low of the bar. It held. And in fact, the volume breakdown stayed positive for me. So the fact that it couldn't even take out this low, the long play is still there. Still there, and in fact, notice it traded higher this bar, just 1 tick. Here it traded a couple ticks higher than this bar. So there's a tendency, this thing wants to go higher. That's just reading, bars. But the intra-bar information that this the volume imbalance shows you is crucial to understanding the market tendencies. So what we get, we go by a few bars, we go by for a while, and then look. Boom. Just heavy imbalances to the buy side again. And then look. And notice you got 1, 2, 3, 4, 5. Next price 6, 7, 8, 9, 10, 11. And you could even keep counting if you want. This is just strong buying. And look, it didn't happen real fast here. This didn't happen real fast. But I want you to see how you can read this to help keep you on the right side of the market and not get stuck trying to sell tops or buy bottoms. Sometimes it's really hard to listen. Many times people are much better at not listening and trying to just interject. Let the market talk to you. Let the chart talk to you. And then notice what happens up here at the high. And this was actually the overnight high. What do we see on this bar? You can see the sellers stepped in finally. And what else do you see? There was no buy imbalance. The buying imbalance ceased to exist. That alone is very valuable information, especially when we've seen it be so prevalent in the previous bars. Every bar leading up to it had multiple buy volume imbalances. Here we have none, and in fact we have selling. So hopefully this is making sense. I really want this to connect to those of you who maybe struggled reading the footprint or didn't see the value of the intrabar information. This is the best way to really take a look at it and read it. Let the chart talk back to you and help you understand this information. And remember, again, this is intrabar stuff. All right, here's one this morning. This is actually the trade that I was referencing that I actually was on. So, and we'll maybe go back and look at the chart, but here we are. And this was a screenshot after the fact. I know this shows this is flat. I scrolled back later on and took this screenshot. But here was the thing. The market obviously moved lower. We can all see that. But what do you see in the move? What do you see in this move? Let's say I was short within this area, just multiple prices. But what do you see here? Selling, 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 selling. It wasn't until right here that we finally had it become somewhat balanced. And what do I mean by that? Well, we had a couple sell volume balances and a couple buy volume. It was on this bar for me that I lightened up. I actually lightened up down in here. I let this one go because to me I considered it neutral and the market was weak. I wanted to see if they'd make a push lower. When they pushed lower on this bar, I covered up 62 halves, 75s and quarters, I believe. But you can see it was heavy volume here too. There was heavy volume, and we got this. When we get that kind of thing, and there's already a nice move, took some off the table and then covered up the rest over here. But the point is it allows you to sit relaxed with a position and understand what the fuel is in the market. Which way is the wind blowing? Is it the sell side or the buy side? Now, it's not always this simple, but we're trying to identify how can you identify a trend and feel confident that you understand what's going on. Because generally, I find most people trading they're not confident in it. They feel every time it's almost luck. They got lucky on that one. Doesn't work. And it's hard to develop any kind of real skill that way. You need to feel confident in what you're doing and what you're looking at. And so the footprint, it provides you that because you're allowed to look inside the chart. You have more data available to you. And this applies that logic to help you read what's going on. Okay, so this was good. Okay, some questions on this. What did I have it set to? This was the default. This is default. I didn't have this set to any special percentage. By the way, guys, I'll share this chart with you at the end. I'm going to provide the chart definition, so anybody that has market delta can import the chart. Next example. All right, so this one is not. I'm going to use this because this was another one this was a few days ago. This is crude oil. I was trading this as well, and I saw this happen in real time, and I took advantage of it. But I'm going to describe it. The volume imbalance helped me, but the footprint. It was the footprint that ultimately was the key here. Market. I'm not going to talk about all this. It was bouncing around, and the market came up, and I saw in the order book in my dome. A market delta trader, it was only showing 10, 5, 20 at the offer. However, I'm watching the footprint and I'm watching the volume tick up. You know, it went up to 50, then 75, then 150, and each time I'm watching the order book and it was just showing a small quantity. And it was an iceberg order. Once this number, I'm looking at this number right here, guys. Once this number hit 250, I was like, whoa, there's clearly an iceberg, and I was watching it play out in real time. So, and I'm not suggesting this strategy, but this is what I did. It was just a quick scalp. I literally put a buy stop right here, 21 even, 96.21. So the idea was when it finally breaks through this, if it does, and it could have held and went lower, but when it goes through, we're going to see some activity. So I had a buy stop. I got filled at 22 even. because it kind of blew through it in one shot. I got filled at 22, and it's almost instantaneously it was up here, and I just took a quick profit. I mean, literally within 2 seconds it happened. This happened really quick. And the point is, without the volume imbalance showing me this huge imbalance, but also the footprint showing me actually how much quantity was trading at a level, I would have never known, and I would have never been able to take advantage of it. So this is definitely more of an advanced trade. I wouldn't, you really got to be in tune to kind of spot these sorts of things. Nonetheless, the buy volume imbalance, as you see here, did show, and look at the size of that number, 903. Look at all the other numbers that are highlighted on this chart. You don't hardly see any over 50 or over 100. So this was a huge, this was a big number. It turned out to be kind of a magnet later on as the market rotated around. So I'm not going to get into iceberg orders, but because it's definitely another discussion, but it was this type of information that allowed me to take advantage of a nice opportunity in the market, and just be aware. Part of trading is being aware of news, aware of what's going on, and that was it. So, okay, so moving on, let's so some of the let's just to summarize some of these volume imbalance footprint benefits. It's easy to understand and trade with. Hopefully you've seen that as I've walked through this. It identifies the trend. How's it do that? It just does it by showing you see the price activity, and then you're looking for these volume balances to confirm it. Confirm support and resistance levels. Those were the resistance, the reversal examples that you saw. We're looking at those support, at our known support and resistance levels, and it could be high of day, low of day, whatever you might be looking at. We're looking to see the market respond at those levels in the direction that we want. When we see the imbalance come in at a known level, that's great confirmation that the market is possibly going to move away from that. It's going to reverse. So, and then the intra-bar information. You're going to be ahead of the competition. Let's face it. Everybody in here listening, and probably everybody that watches this video for all of time, you're still a very unique subset of individuals. Most of the world out there, most of the world will always look at open, high, low, close. It's just the way it is. That's the way everything is taught. That's the way most that's just the way it is. You guys, you ladies and gentlemen, are a unique group of people. You know there's more to be had. You know there's more to see. You're seeking it out, and hopefully you found it here. It's allowing you to see inside the bar. So instead of reacting to just an open, high, low, close, you're actually looking at within the bar. We're now applying this logic to help you have that read, and you should be ahead of the competition with it. So, of course, I wish everybody my best, because these tools are meant to help traders. So this is the last slide, and then we're going to jump in. I'm going to take some questions, and I'm going to show you obviously the software. We'll just bring up the market in case we want to look at anything. But I want to encourage everybody, give this a try. If you're already a MarketDelta subscriber or on trial, you have this. If you're not, go to marketdelta.com/trial and get a trial. It's volume imbalance, and I'm going to share some links out here in just a moment. So hang with me, because it kind of talks more about the volume imbalance and how to access it. And I'll show you on the chart as well. But this is in all versions of MarketDelta: Standard, Edition, and Professional. So you're not, you get whatever version you have, it's in. Okay? So I don't know what else to say except give it a try, because I'm that confident that it's going to help people. And something I didn't say yet that I probably should have is we've had tremendous feedback on this from users who've been using it, from our in-house trading room to our third-party educators, people that are applying this are really excited about it, and we're getting great feedback. So I definitely wanted to come on, show everybody this, answer some questions, at least in the time that we have. And if your questions don't get answered today, email them in. And myself or a team member, we'll do our best to get these answered. Now, another thing we're doing is, because of, we want to make sure we follow this up. We have another webinar already scheduled. I'm going to post the link in, and you maybe open this up in another tab. There it is. That's a follow-up webinar that's going to occur on November 11th. That's actually going to take what I talked about today and go into more applying it. So this was more of that introduction, explaining it and all that. What I want you to then see on that webinar is essentially we want to look at how to apply it. Okay. So let's I know there's a ton of questions, and I guess now I'm saying let them fly, but it looks like there's a ton. Anthony's been doing a great job, it looks like, answering a lot of these. Let me see if there's any that are flagged. Okay. I'm just going to start at the top. David was asking, can we use this in a volume breakdown calculation? No, I don't believe. Okay. So let's take a look. This was today. This is the ES. I'm going to double click the chart. I want to show everybody how to access this. So I'm simply double clicking, and this is what I'm talking about. If you click the footprint display and then volume imbalance, it's down here. This is the one we're looking at. And then you got automatic. That's the one I referenced, I'm kind of recommending. And then there's the manual. So if I set this to manual and I set this to, say, 400%, click OK, you could see, notice the coloring, there's still some examples. And notice, even then it still does what we're looking. We're looking to, it confirms that move, right? Notice how this one came in, just at least stopped the move down, bounced a little, these guys came back in selling. But that's how you control this. So if I double click the footprint, double click the footprint again, I'm going to set to automatic, click OK. There we are. There we are again. Okay. Next question. Okay, how do we arrive at the 140 after just a lot of testing? Okay, there's only, someone's asking about the color shading. Okay, so on this shading, there's only one. This level 2 and level 3, ignore those. They're not going to do anything. It's this level 1. It's the only one that's important. Okay. Somebody's asking, what about like the reversals? You know, it'd be nice to see them develop. You will see them develop. I mean, as the market's trading, you're going to see these things happen in real time, right? So I know I got the ES up. Let's go to that break. Oh, here, this is just a, actually I'd written down a few. Let's take a, I'm going to find a few examples because I wrote down ES at 1340, actually right here. So this example, you know, look at the momentum that we saw here, right? See how it confirms it? And then we get down into here. And remember, I still recommend using this against your support and resistance levels. I'm not saying use this just without anything else. You want to use it against your known levels because it'll make it actually come alive a lot more. You see something, you see it, if you have a resistance level up here, notice this was near a high volume level. You can see it over here on the left-hand side of the chart. Market rallies up into it, can't get through it, and then we see sellers enter. There's a lot of confirmation and confidence that comes out of seeing that play out. Another example was at 9:40 this morning. So let me scroll back. Let's see, where was I? Okay. Yeah, so this is a different pattern. Now, believe me, you're gonna develop and learn as you go on some of this. You're gonna see unique patterns. The main thing though is you got buy imbalance, that's what green, and sell imbalance is the red. That's obviously the primary thing. But as the market came down here, we got this one where you get a surge back up. It's a rejection. Notice that was the overnight low, so it rejected off that. Up, up, and then notice we get another rejection down. So when you get these consecutive prices, this is the point. This is what I want to point out. 1, 2, 3, 4. Real strong. That's showing you a rejection at every level. And it does its thing, goes up. And then what happens up here? It's another strong rejection down. 1, 2, 3, 4. It gives you an idea of not just the fact that there's an imbalance in the selling, but that it's a strong rejection, not at a single price, but at multiple prices. Typically, you see that type of behavior, at least from what I've found and seen, when it hits a level that's being strongly resisted. Because let's face it, when a level's going to be rejected, it's not that it's a single price, especially when the larger institutions or traders want to defend it. They can't all get in at one price. They're going to reject a series of prices, or think of it as a price band. So boom, down. Same thing, comes back up, tests it, and what do we get? We get some selling. And then look. I mean, this is, I don't know what to say. All I can say, guys, is use it, test it, try it. That's the best thing I can say. Okay, questions. Okay, good question from Guido. When do you enter? When do you enter? At the end of the bar or intra-bar? That is totally up to you. It depends on how aggressive you want to be. So I think part of it depends on what type of trade is it. Are you actually trying to go with it? Is it trending and you want to get on and take it? Or is it a reversal? So if it's a reversal, reversals can be tricky because it may not be reversing. So you may want to wait for confirmation on a reversal because the potential for the trade at a reversal is typically, the risk reward on a reversal trade is usually good. You're looking maybe for 3 points with 1 point stop, something like that. I'm just using that as an example. So reversals, you may wait for the bar to close and then take the trade. There's no need to maybe be real aggressive intra-bar. However, on a trend, let's say the market's starting to break out and it's running. I mean, this thing's running. So you may not you may not want to wait for it to close. You may just hit the bid or lift the offer to get in. All right. All right. Some of these questions came in when I was probably saying something. It's not clear what the context of it is, so I can't answer it correctly. All right. So Chrissy's asking, do you really go by the colors of the numbers? I don't understand how you read the numbers. The numbers, I haven't really talked about the size of the numbers except for that one crude oil example. I've really been talking about the color. And that's primarily what I would focus on, because remember, the nice thing about this, it's not using numbers. It's not comparing. It doesn't have to be 200 contracts versus 100. It's comparing it at a percentage level, which is great. So this immediately applies across any market that you have put on. So like I'm looking at the ES here, I could change this to the NQ. And there it is. You know, immediately, this is the NQ. It immediately applies the algorithm to the NQ. I'm going to go back to the ES. So hopefully I answered your question there, Chrissy. I'm not so much focused on the numbers, and I really wouldn't encourage you to be either, simply because until you, especially you're more experienced and you want to read and see what the these volume levels are. But initially, just using the color tells you what you need to know. It tells you there's a bivolume or a cell volume imbalance, and that's the information you're actually looking for to either confirm the direction or confirm the reversal or rejection. All right, let me scroll down here, guys. Lots and lots of questions. This is good. I like that. All I can say is if you're not getting an answer from me, email them in, or I know Anthony's answering a ton, so thanks to him for that. All right. Sorry, I'm just kind of scrolling through, guys. So we're coming up on an hour. I'll certainly go through that to get some of the questions answered. So let's see here. All right, so here's a question from Patrick. Doesn't the volume imbalance show the same thing as a footprint bar? By imbalance bar is similar to footprint bar with all blue squares. Obviously, you could look at this chart and then the numbers reflect the bid-ask footprint. That's what you do see. But what's also then overlaid on this or applied is this volume imbalance algorithm, which is highlighting imbalances in that order flow. Hopefully I made that clear. You asked that a while ago, so maybe I've already answered it. But it's highlighting imbalances in order flow, comparing, like I started out the discussion, comparing on the bid versus the ask, bid versus the ask. It's looking for that imbalance. Okay, Michael Wingate, you're asking, or Michael W. This is you're asking. This is available in marketdelta charts. I should have said that earlier. This functionality is in marketdelta charts. I also am running marketdelta trader on the side here, as you see. So the data from here is feeding my chart, and that it also allows me, as I place trades, I can see my trades on the chart. I can trade from the chart. So it allows real quick reaction time, but it also allows me to a free data source, and it also I like being able to enter right on the dome or on the chart, whatever I want. We support multiple data feeds, so marketdelta.com/trial, you'll see all the data feeds we support, and I don't want to get too much into that discussion. If you have questions on that, call us tomorrow. We're going to be available after 7 a.m. Or email us. Best time frame. I would say don't try and find a best time frame. Apply this to whatever time frame you look at each and every day. Don't try and fit the data. Apply this to what you're used to looking at and see if it's of value. That's the best thing I could say. I don't want to, there's no need to try and retrofit it. If you look at point and figure, apply it to your point and figure. If you look at range bars, which is what I'm looking at, that's what you want to try it on that. If you look at time bars, look at it on that. All right, Mary, you're asking for the chart definitions for crude and the euro. Are they posted anywhere in the blog? I'm not sure, but I will be posting all these charts, all the examples that I posted that you saw in the PowerPoint. I'll be putting them up tomorrow in a blog post, so you'll be able to see those. Here is the chart definition. This is probably for any of you guys using Market Delta right now. Here's the chart def that you're looking at. Open that in another tab. You can just save that and import it, and you'll have the volume imbalance chart. I've done a little customization. I like this, the way I've got it set up. Out of the box, it's not, I think the colors are a little different. I really like it this way. They just pop on the chart for me. And I'm like everybody else. I want that display to make as much sense as possible. Yes, you can put pivots on the chart. You can put whatever you want on the chart. Moving averages, value areas, whatever you want to put on here, you can. I'm trying to keep it clean so that we could just focus on the actual volume imbalance data. Okay, so Alex, yes, this thing does work with point and figures. In fact, let me change this. I'm going to change this to a like a reversal. So here's a 5-tick reversal, point and figure. ES, this is today, this is right now, as of the close. You can see that rally up. You can see how it's confirmed. Let me scroll back. Let's look at this. Here's your breakout. This thing was wedging. You get it break down lower. Here's a nice one. You get the market pop up. You get your buying balances, but then you get it's contesting the selling. Notice how it capped it off. It's these types of patterns I love because it tells you they're being defended. You're reaching a level where there's a defense put up, and then it just probes, touches, just 12 contracts. You never know that on a bar chart. Never know it. You'd see it. You'd see that it tested. You'd never know that it was on that such light volume. It's meaningless. Here's some guys. There's this stuff. They're stuck here. All right, so here's another move. Okay, here's another example. And let's just talk about this. It's confirming the move up, right? And what do you see at these top prices? The buy volume imbalance just stopped. It was there the whole way up. And then what? It just stopped. So it ran out of fuel. I don't want to make it any more complicated than that. Buy volume was present and then it ceased to exist. The fuel ran out. Now, yes, the market chopped and went sideways, at least in this was over 3 or 4 minute time. This is a point and figure. But what do I got this on 3? No, anyway, you get the idea. I mean, there's value in this information. I'm just encouraging you to check it out. Okay, so there's some questions in these gray and the blue and the navy. I don't even talk about them. I mean, you can here's a blog post that you can talk more about it. I referenced it, but it's negligible. It's not a buy volume and it's not the sell volume. We call it neutral. So it's just the opposite side of what the sell volume was or the opposite side of what the buy volume was. It's simply the other side of buy volume or sell volume imbalance. That's it. And I'm only concerned in looking at the red or the green. Here's an article on this. This is a little more of a write-up on the volume imbalance, and I encourage you to take a look at that if this is of interest.